All right, let's talk Ouster. They just put out their Q2 numbers, and wow, the market, it definitely took notice. So what's all the excitement about? We're going to dig into the numbers, break down their whole strategy, and then give you our take on where this thing is headed. And when I say the market took notice, I mean it. Look at this, an 11.7% jump in the stock right after the announcement. Investors absolutely ate up what they heard. So let's get into the why. What was in that report? But this isn't just a one-off thing. Let's zoom out a bit. Over the past year, Ouster is up almost 300%. The small cap index? It's actually down. That's not just a lucky break. That's some serious sustained momentum we're seeing here. Okay, first up, the market's bullish verdict. Let's look at exactly what got investors so fired up. And really, you don't have to search very hard to find out why everyone was so happy. The CEO, Angus Piccala, he spelled it out pretty clearly. They brought in over $35 million in revenue, which was better than they even guided for, and they did it with a really solid 45% gross margin. I mean, that's the kind of report card that makes Wall Street sit up and pay attention. So let's drill down into those numbers, because this was more than just good. This was a beat across the board. And when we say a beat across the board, we mean it. Revenue, earnings, gross margin, you name it, they beat the analyst consensus. It was just a clean sweep, a true trifecta of outperformance. So let's start with the top line. A record $35 million in revenue. That's a 30% jump from the same time last year, and it sailed right past what Wall Street was expecting. It's pretty clear their growth engine is really humming right now. And it wasn't just about revenue. The story on the bottom line was just as good. They beat earnings by 7 cents a share. What does that tell you? It means they're managing their costs way better than people thought. They're showing real discipline on the path to becoming profitable. But honestly, for me, this is the number that really jumps off the page. 45% gross margin. That's a huge improvement. We're talking 1,100 basis points or 11 full percentage points better than last year. And it's happening for the right reason. It's a better product mix. They're selling more of their high-margin products, and that's exactly what you want to see. And get this isn't some one-hit wonder. This is the 10th quarter in a row that Ouster has either met or beaten their own guidance. Think about that. 10 straight quarters. That kind of consistency builds a ton of trust with investors. It shows this management team knows what they're doing, they say what they're going to do, and then they go out and do it. But great numbers are just the result. To really get what's happening, you have to look at the engine driving them. And for Ouster, that's something they call physical AI. So physical AI, what is that? It sounds a little like a buzzword, right? But here's the best way to think about it. Ouster used to be a company that just sold the hardware eyes, their LiDAR sensors. Now they're becoming a company that sells the brain, too. They're packaging that hardware with smart software and analytics to create a whole solution for autonomy in the real world. And this isn't just some PowerPoint strategy, okay? It's translating into real major wins. I mean, just look at what they did this quarter. A multi-million-dollar deal with a Fortune 500 company. They became the only 3D LiDAR with a key certification from the Department of Defense. They snagged a contract for the FIFA World Cup. They're powering autonomous mowers, expanding smart city tech in Utah. It's just win after win. The strategy is paying off, big time. And again, the CEO just nails it here. They've transformed. This is the whole key to their story right now. They're not a hardware parts supplier anymore. They are a physical AI company. They're selling solutions, and that means stickier customers and, you guessed it, better margins. Okay, so that was a great quarter, but in the market, it's always, what have you done for me lately? So let's look forward. Section 4, guidance and future catalysts. And the outlook looks pretty strong. For next quarter, they're expecting revenue between 35 and 38 million, so they see the momentum continuing. And long term, they're aiming for some really ambitious growth, 30 to 50% a year, while keeping those nice, healthy gross margins between 35 and 40%. So you might be asking, how are they going to do that? Well, it all comes down to their next big product cycle. They're building their own silicon, their own chips, which is a huge deal. This new tech is going to unlock their solid-state product line, and here's the kicker. They think it's going to literally double their total addressable market. That's a game changer. So if you're watching this company, here's what you need to keep your eyes on. First, that defense sector. That certification is a big door opener. Second, watch them turn these pilot programs into big, scaled-up deployments. And third, and maybe most important, watch that software revenue. As they launch new hardware, that software piece needs to keep growing right alongside it. Okay, it's time for our final section. We've looked at the numbers, the strategy. Now it's time for the next call, our rating. So we've gone through it all. The results, the strategy, the future outlook. What's our final verdict on Ouster? Simple. Our rating is outperform. We believe Ouster is set up to continue beating the market. And why? Well, let's tick the boxes. Consistent execution? Check. 10 straight quarters. Strong financials? Check. Great growth and margin expansion. A smart strategy that's actually working? Check. Physical AI is landing huge deals. Diversified growth? Check. They're not a one-trick pony. And a powerful roadmap? Absolutely. That new silicon could double their market. It all adds up. So here's our specific prediction for next quarter. We call this the next call for a reason. Given that incredible track record, we predict Ouster will meet and maybe even beat the high end of its own Q3 revenue guidance. And if that happens, we expect the stock's positive momentum to just keep on rolling. So there you have it. That's our analysis of Ouster's fantastic quarter and what we see coming next. Of course, we have to say it, this analysis is for informational purposes only. This is not financial advice.